Alex Mashinsky, CEO of Celsius Network, joins us again today to talk about Bitcoin, cryptocurrencies, and the macroeconomic landscape. There's lots to discuss: inflation, the Fed's response to inflation, and of course, what has been happening to the crypto markets. Alex, welcome back to the show.
Thanks, David. Good to be back.
Exciting topics for today. Prices of cryptocurrencies continue to be very volatile. You mentioned to me offline, this is a fact that I wasn't aware of, but apparently Bitcoin has been falling for 8 consecutive weeks, which you mentioned to me is the first time it's ever happened in its history. Let's talk about that, and we'll talk about later the Fed and inflation. So 8 consecutive weeks of decline. That, to me, that sounds like maybe perhaps an overreaction. If it in fact is the first time it's happened in history, perhaps we're overdue for a correction. Upwards, a rebound upwards. What do you think?
Yeah, so 8 red weekly candles is definitely a new one for the record books. I saw also stats that the stock market drop was faster than even 1929, right? So this is records not just for crypto, but also for the stock market. And it's ultimate fear, right? All fear across the board. There's so much fear that even JP Morgan, who's not usually don't talk about crypto, issued a report this week saying that maybe the crypto sell-off is overdone and they see a rebound to the 38,000 level from where we are today. But also, if you're watching the last 2 days, we had the green candles on Wall Street, and we're still seeing red candles on crypto. And I can only explain that by the fact that there is $1.8 billion worth of expirations that are happening today. So I think we will see a reversal over the weekend and into next week. And you can press spring as hard as you want, but the harder you press it, the harder it rebounds. And here we're overdue for a rebound.
A rebound to JP Morgan's target was $38,000. I know they're putting out a bullish forecast. It is, I think, a 29 to 30% increase from today's levels. But still, Alex, if you and I have been talking several months ago about a $38,000 price level, we would be having a conversation about bearishness, not bullishness. So to me, it still sounds like a moderately, cautious forecast. They're not particularly optimistic. Is that a sentiment that you've observed from, crypto investors at large, institutional investors you've worked with, that people are just very cautious about cryptos right now, even despite this drop that we've seen that some would argue is overdone?
So look, crypto divides into people who are hodlers like Michael Saylor, like the Celsius community, that our community of almost 2 million users, they're still adding coins to their positions, and a very large numbers of speculators or traders or people who are just come and go. And you're seeing risk off across the board in the stock market, in the bond market, right, in the crypto market. So this is not something that is just happening here. So again, you have bifurcation. You have continued accumulation by people with conviction, but you're definitely seeing people who are just traders either being wiped out, like the people who were long into this week with options or futures, or people who basically bought a margin. All those guys are getting cleaned out, but when they're done, where they're out, there's no more sellers, right? You just basically are left with the buyers. So yes, we're gonna have lower numbers here, but when we're done with the selling, we should have a nice uptick in prices that comes from coins have been moved from the weak hands to the diamond hands.
JP Morgan is not the only firm or institution putting out forecasts. Other institutional investors are giving out forecasts. This is a particularly bearish one. I was reading in the news. This came out of Davos. This came from Scott Minerd, who is a CIO of Guggenheim. And I'm just going to read you his quote. "When you break below $30,000 consistently, $8,000 is the ultimate bottom. So I think we have a lot more room to the downside, especially with the Fed being restrictive." How would you respond to that?
Well, none of the money from the Fed is going to buy Bitcoin, right? So that's just not how things flow. And Scott has been a Bitcoin denier for a very, very long time. Ray
True.
Dalio was on the same stage, and he said exactly the opposite. He said, you need to allocate to crypto, you need to allocate to this digital gold. And most of the people, I think, at that conference agree with Ray and disagree with Scott.
Okay. Let's come back to the Fed. But first, let's close on your Bitcoin thesis here. Look, we've talked about your outlook a lot before. You've correctly called a bottom a number of times. What do you think is a fair bottom for us now, given where things are at? And how do you see this progressing into the future? We've talked about the 8-week consecutive decline. What's next is basically what people are wondering.
Yeah, so I'm a little cautious here to call this a bottom, and I'll explain why, right? So none of these things that are happening are basically independent. It's like the Bitcoin market, it runs on its own and it has its own drivers and so on. All these things are connected. So the Bitcoin or the crypto market is watching the stock market is watching the Fed, and the Fed is watching inflation. So for the last 20 or 30 years, the Fed has been sitting on the Pandora box, making sure that the box doesn't open and that the three-headed monster, the dragon of inflation, escapes the Pandora box. But now it escaped. The dragon is out there spewing fire in every market, and the Fed needs to slay the dragon, right? That's the only thing the Fed chairman is focused on. Doesn't matter if the stock market house is on fire, or the bond market house is on fire, or the crypto house is on fire. So the Fed chairman already managed to slay one head. We went from 8.5 print on inflation to 8.3. That was 2 weeks ago. We need to see two more prints. So we need to cut two more heads of this dragon, and then we can put it, we can kill it and put it back in the Pandora box and sit on it tightly. So when that happens, when that print comes through, the Fed can then pivot and look at the markets, look at what they need to do to calm the markets, and they will do that. But they're not going to do it before they know that inflation is under control. And when the Fed speaks, the public markets listen, and when the public markets listen, the crypto markets follow.
We're going to come back to the Fed.
Just remember when Bitcoin recovers, it usually recovers 5 to 8x of where it was, or even more, where the stock market will only go up, whatever, 30, 50, 70%. So the rebound, it's a coiled spring, right? The rebound on crypto is always stronger, and it always represents new higher highs and new higher lows.
Well, Alex, whether or not inflation is tamed by the dragon slayer known as the Fed is still to be debated, and we'll come back to that. But what's not disputable is that Bitcoin has not been progressing with inflation, in the sense that the price has not caught up with this year's CPI and PCE prints. People are wondering, Alex, why hasn't Bitcoin been performing as an inflation hedge? How would you respond to that?
Yeah, so you have to zoom out, right? When you look at, if you take 10 years horizon and you compare the S&P versus inflation versus Bitcoin, it outperformed both of them. Basically, if you measure them against Bitcoin, you will see that both of them basically, like the S&P lost 99% of its value in a decade compared to Bitcoin. So it's just a question, are you looking at a week, a month, a year, or a decade?
So PCE, core PCE came out today. This is the Fed's preferred measure of inflation. This is the measure they use to actually make policy decisions with. Core PCE came out at 4.9%, which is slightly lower than the month before, but still in line with estimates, consensus estimates. The Fed probably is looking at this and wondering, like you rightly pointed out before, that inflation is probably being tamed right now. I mean, 4.9% is still high, 8.1% CPI is still high, but perhaps this is the peak, Alex. What do you think?
I do think that we hit peak inflation. Again, we had to adjust to the war between Russia and the Ukraine. We had to adjust to this complete shutdown in China. And it takes time for the U.S. economy to refactor, recreate the supply chain. It's not happening overnight. But it's all of that is already in the works. All of that is already happening. And I think the U.S. always springs out of these things first, and it springs out of it faster and stronger. And like Warren Buffett says, do not bet against the U.S. economy. So I think we are seeing a correction here. We are seeing a pivot. Everybody has to adjust how they do business. What do they do? Risk is off. Capital costs are higher. All these things represent, again, an opportunity for the best companies to excel, and for the companies that did not have a good business model, that were all just living off free money, to have to make major adjustments.
Okay. Is your view then that perhaps the Fed will ease back on its tightening measures this year, which could potentially bring in more capital to risk assets like cryptos?
I think the Fed will basically, when they tame inflation, will announce that they don't need 8 hikes, that they might be loosening up on the quantitative tightening. So they're not gonna go back to QE, but they're gonna do less QT, right? And all these things are very, very strong indicators to the markets that the Fed is not going to stand in their way, right? What the markets don't want to do is fight the Fed, and right now the Fed is in charge. You know, they have the sword, and they're focused on the dragon. And anyone else who thinks, oh, you know, come help me, you know, look, I'm the Nasdaq and I'm down 31%. The Fed could care less about the Nasdaq. Doesn't care if the Nasdaq goes down 40%, right? So inflation could basically hurt the entire U.S. economy, could hurt the largest economy in the world, and can hurt the U.S. dollar. And those are the things that it's focused on. And on the other side of this, on the other side of the coin is the labor market. So we are seeing definitely still tight condition in the labor market. So you need to see both of those relax, and then the Fed will be much more accommodating.
Okay. I'm sensing then you're saying that Bitcoin's ultimate future, and the rest of the cryptocurrencies as well, basically rests on inflation. So again, correct me if I'm wrong, but I think what you're trying to say is that if inflation doesn't come down, the Fed will be forced to continue its tightening measures, and that will restrict capital flows into risk assets. On the other hand, if it eases up, then yeah.
Yeah, so all the Fed is doing is delaying Bitcoin going to new all-time highs, right? So even with all of this action, inflation, and everything else, you have a long-term trend. The long-term trend is migration from centralization to decentralization, from Web 2 to Web 3. And a lot of that migration involves cryptocurrencies, right? So no matter what happens, it doesn't matter even if there is inflation, all that does is just delays the inevitable, which is a mass adoption of cryptocurrencies across the entire planet. And so the question is just, when are those all-time highs coming? Are they coming this year, the next year, or 3 years from now? So if you're a hodler, again, if you're a Celsius customer and you're just hodling for many years, that doesn't impact you, right? The opposite, you're getting another opportunity to buy Bitcoin at lower prices, right? Because you're averaging in, you're accumulating Bitcoin over time, or Ethereum over time, and you're getting an opportunity to buy something at 30,000 instead of a 60,000. So crypto holders are not looking, again, the hodlers are not looking at this as, oh my God, we're not going to hit our plans and we were about to sell all of our coins. They were not planning on any of that anyway, right? They're hodling. So I don't see change in behavior in the Celsius community. I don't see change in behavior with the other whales that we work with. Yeah. Or institutional adoption. It's just a question of, are we delayed by a year or two from the mass adoption curve that we were talking about?
It is interesting how cryptos are responding this time around, because if you recall, back in 2015 was the last time the Fed raised rates. I'm just looking at the federal funds rate, the effective Fed funds rate. And they were raising rates from 2015, the end of 2015, all the way up to 2019. And then they went back down to zero. During that time, of course, Bitcoin had a very remarkable rally to the highs of 2017 before it came back down. So I'm just saying that it didn't coincide with the Fed funds rate. The Fed funds rate was going up, but Bitcoin was also going up at the time. So clearly now something must be different because, the argument that the Fed is causing the Bitcoin sell-off, well, maybe it is, but I'm just saying last time that doesn't seem to be the case, right?
Yeah, so during that entire period, we were still risk on. We were not risk off,
Okay.
right? So the big difference is that right now we are risk off because of the uncertainty. So even though the Fed was raising rates, we did not have 8% inflation, right? So everybody's concern is it transitory? Is it under control? Can we slay the dragon? Can we put it back in the box and not have inflation for a decade or two? Or is it something where we constantly have to fight the dragon? It's constantly going to jump out. We're going to have to fight it every few years, which obviously changes dramatically both the risk on, risk off parameters, but also what the Fed is focused on.
Okay. Well, something that hasn't been helping crypto's cause lately is the collapse of UST and Terra Luna. People have examined this in detail. I'll keep it brief, Alex. Do you think what happened with Luna could happen with other stablecoins, specifically other algo stablecoins?
Yeah, so some people are calling it the Lehman moment of crypto. I don't agree. Lehman was leveraged 50-1, and it was interconnected. It had relationship with every other bank, every other institution on Wall Street. The Luna UST situation is very contained because most of the people who were in that were either on the Luna side or on the UST side, and they were not really. It's not like Luna had connections into Bitcoin or Ethereum or 20 other projects, right? So because of that, even though there was tremendous loss there, and again, Celsius had nothing to do with it. We almost had no exposure. Obviously, some of our customers hold UST and Luna, but Celsius did not transact or lend with DAO, with the Luna, with the Terra Luna DAO. So it's not a Lehman situation, but what it did create, it created a lot of uncertainty about what is a stablecoin, who calls themselves a stablecoin, and we've seen drawdowns from Tether and from other stablecoins resulting from people's risk-off scenarios, right? People worried having exposure to some of these other stablecoins, even though they're over collateralized, right? Where you really, people are comparing apples and oranges.
That's true. It's probably not as interconnected as Lehman, but I'm just reading the market cap from before the crash. The Luna ecosystem market cap was around $42 billion. That's still a lot of money wiped off, and one could argue whether or not people could get it back again, but right now it's looking dire. I think right now, Alex, the bigger issue isn't so much interconnectedness, it's a lack of confidence in not just stable coins, but cryptocurrencies. The timing was just very bad. I mean, we already had a cryptocurrency correction, price correction, and then this happened independently of the Bitcoin price correction. So people are probably just very, I guess, risk adverse, if you want to call it that, going into the crypto space, given a two-pronged attack from, yes, an independent coin had a crash, but a malfunction, if you want to call it that, but also the broader crypto landscape at large. It's not, these two things are just not helping each other. What can we do now? What does the community need to do now to bring back confidence to investors?
So I think it's coming back. Again, looking at the Celsius numbers, yes, we had outflows of stable coins. That was probably our number one outflow numbers in the last 2 weeks. But this week we've seen green numbers again. So we're seeing the capital flowing back. Capital does want to work and earn yield. So I am seeing a reversal already. And again, you're seeing a reversal in the stock market. You're seeing a reversal in capital flows in the crypto space. The only thing we are not seeing yet are green candles, right? So I'm predicting a green candle tomorrow, a green candle on Sunday, a green candle on Monday, and the green candle next week, right? So I think we're overdone here. And obviously, again, maybe JP Morgan heard me talk about it last week and they wrote their own commentary about it. But the point is that it's much easier to move Bitcoin than it is to move Amazon or to move the stock market as a whole. So I think there's probably more market manipulation there than in other larger markets.
This is a ratio that some people look at, the Bitcoin to gold ratio, which is obviously now lower than it was a couple months ago. Is that something that you are keeping your eye on, the Bitcoin price relative to something like gold? Is that an indicator that may tell you where prices could go in terms of, I guess, mean reversion or just a repeat of history?
So very few crypto holders are kind of, when they draw down or when they sell off, going to gold. They're mostly going to dollar. And on your show, I think in January, I mentioned that I'm seeing dollar strengthening dramatically after the Fed action, right? So you can go and look it up, and that's exactly what happened, right? We've seen the dollar strengthen and not gold. And unfortunately, again, gold had a drawdown just like the stock market and just like crypto, because when people go risk off, unfortunately, they also sell gold. You would think they'll be buying more gold, but they're all going into dollars. And that's why we saw dollar strengthening despite the VIX hitting, I think what's 35 was the high in this cycle. So the markets are not necessarily behaving the right way. And we've seen the same thing happen in 2020, and the same thing happened in 2008. So in the beginning, in the first few weeks, everybody runs into the safest house in the neighborhood, which is the US dollar. And then they look out and say, okay, is there still a storm outside? Can I go out? Should I go and try other things? And some of them come back to Bitcoin, some of them come back into gold, and some of them go back into the stock market. And that's what's happening right now.
Yeah, I like to actually see data on personal cash holdings now from the retail investor side relative to a few months before.
Dry powder right now is over $4 trillion. That's how much dry powder is sitting on the sidelines. So, and about half of that is with U.S. Americans with basically having cash in their bank accounts, right? The rest is institutions and other things.
And you know what people are telling me personally is that, hey, David, I have some cash from selling off my holdings, but I need to deploy it now because it's getting eroded away by inflation. This is just a terrible time to have $4 trillion of dry powder sitting on the sidelines. It's all going to get eroded away by 8.1% CPI. People are really waiting, or they can't wait, rather, to deploy this capital back into the markets. The question is where? The Nasdaq's falling, Bitcoin's falling. Yeah.
We still pay 7.1% on stable coins on USDC and USDT and other coins, and it's one of the best places to deploy US dollars, right? So I think you know, for all the people who are looking for a good place, we've been doing it consistently now for almost 5 years.
Can you explain to the audience then why USDT or USDC won't depeg in the same way Luna can? Or maybe it can. I just want to get your opinion.
Sure. So stablecoins come in three different forms, right? One is fully backed, meaning for every token, there is $1 sitting in a reserve bank account or with the Fed. And those are coins like Paxos or USDC or TrueUSD. We support all of those. And so you can basically just go and get exchange your dollar for those, put them on Celsius and earn that 7.1%. Then the second group are over collateralized stable coins. So USDT and DAI are two over collateralized coins. So basically they have reserves that are not, for example, Tether does not have reserves in Bitcoin or Ethereum. Most of the reserves are in cash or commercial paper or other things, and they have attestations. You can go to the website, I think it's tether.io, and look at what they hold. And DAI has Bitcoin and Ethereum as their over collateralized backup, and they were not disrupted, meaning anyone who came to Tether and wanted to redeem $1 got $1, even if they bought it on an exchange for 95 cents. Anyone who wanted to redeem a USDC from Circle or from Coinbase got $1, even if they got it for less than $1 on any exchange. So people have to understand there's a big difference between what it trades on an exchange and what you redeem it for from the issuer. So again, I'm not I don't provide attestations about these companies. Every
Yes.
person can go and check this out. I'm just explaining the difference between fully backed, over collateralized, and things like synthetic coins that call themselves, just because somebody calls themselves a stable coin does not make them a stable coin.
Yeah, fair enough. All right, final parting words for investors. Any good news for the stock markets? We've talked about cryptos. Any good news for the stock markets coming up that you think may boost prices, or maybe things will be bleak for some time? What do you think?
Well, I think this risk off through the good companies with the bad companies. So if you're a great stock picker and you really understand, for example, the tech wreck, some of these companies are down 80% or more, and you can pick great companies that have good cash flows and loyal customer base that is not dependent on corona recovery or on the markets being very strong or anything like that, you will do very well, right? So this is a really good opportunity for stock pickers. We were kind of for the last 15 years or longer, the best place to put assets was in indexes. Now we're shifting to the opposite of that. Now it's stock pickers heaven. So if you have some stock pickers you trust, go and let them manage some of your money.
All right. Good advice, Alex, as usual. Thank you for your insights. I'll speak to you again next time. Thank you.
Thanks for having me back.
And thank you for watching Kitco News. I'm David Lin. Don't forget to subscribe to our YouTube channel.